Welcome to Global Investment Insights, a weekly podcast brought to you by ADCB Asset Management. My name is Kishore Muktinutalapati, an equity strategist for ADCB. With an objective to empower you with investment insights, on this program we discuss various perspectives shaping the global investment landscape. To diversify and to avoid home bias, investors tend to deploy their money internationally. This brings political and geopolitical risks onto investors' books. Investing in multinational corporations also comes with this risk. To state it up front, the benefits of international diversification far outweigh the risks associated with it. Therefore, the point of discussion here is not if the international diversification should be considered, but rather, how should one think about political and geopolitical risks and try to minimize them? Let's start by understanding what political risks are and how they impact the investment landscape. Each country has its own political environment, which investors should assess when they venture into the markets there. But changes to the status quo in the form of changes in the governments, policymakers, party leadership, military control, legislations, etc. bring political risks. These changes in turn also bring economic, policy, and regulatory uncertainty that impact the investment landscape. In simple quantitative terms, the political risk to investments is the probability that changes in political landscape will negatively affect the investment. While it is impossible to make a portfolio free of political risks, investors should seek to understand the areas of biggest risk and work to manage that exposure. Before investing in any opportunity, investors should perform adequate due diligence that evaluates the political risk of an investment. Diversifying across political regimes, avoiding high-risk countries, and considering investing in companies adapting to the market are some of the well-known ways of mitigating political risk to the portfolios. Having said this, we think a range of political risk events face investors over the next couple of months. These include the US midterms, UK Conservative Party leadership election, Italian general elections, 20th National Congress of the Chinese Communist Party, etc. To start with, in the US, the midterm elections of November could bring stalemate to the US policymaking if Republicans take control of the Congress. Such an outcome, which is not a given, could result in stalling key policies for markets such as tax changes and regulations for tech and cryptocurrencies. Recent polls showed that voters' preference for Republican congressional candidates over Democrats is narrowing. Of course, this could change again. But one sure thing is that over the next couple of months, poll watching will be back in vogue. Across the Atlantic, by September 5th, the UK will have its fourth Conservative Prime Minister in just over 6 years. Both the frontrunners for the Conservative Party leadership have distinct economic agendas, which could have meaningfully different implications for growth, inflation, and interest rates. Moving to Italy, after the surprise fall of the Mario Draghi government, the country will have snap elections on September 25th. Though electoral campaign hasn't officially started yet, parties' agendas could vary in terms of spending rises and tax cuts. The election outcome could also have a meaningful bearing on whether Italy will be able to access the €800 billion EU COVID fund. Moving further to the east and turning to China, where the Communist Party will be holding its 20th National Congress, speculations about the change in policies after the Congress are likely to impact financial markets there. In summary, while there are a range of political risk events over the next couple of months, they are likely to be short-term drivers of volatility and not long-term constraints on the markets. As an investment philosophy, presence of political risk should not stop investors from investing internationally. However, political risk mitigation strategies need to be in place. Staying diversified and disciplined always helps. Thanks for listening. We hope you found this podcast useful. If you did, please do share this and other episodes with family, friends, and colleagues. For more information on what was discussed on this podcast and to understand what political risks mean to your portfolios, please reach out to your contact at ADCB. You can also log on to our website at www.adcbam.com for more information. You were listening to the Global Investment Insights podcast from ADCB Asset Management, and my name is Kishore Muktinutalapati.